Hey everyone, it's Tim here. I'm joined with Pat Holland. It is November 3rd, 2023, and we've had a lot of big economic news happen this week. Pat, just tell us what happened this week that has caused this positive news for interest rates right now.
Thanks, Tim. So week over week, there's a lot of economic data that comes out that the markets, consume, they review, and then they react. Well, this week, starting on Wednesday, when the Federal Reserve met and then reported the anticipation of whether or not there was going to be a rate hike for November. Well, they decided to pause. And when Powell then took questions and gave his report, Cliff Note version, basically they were going to let the data that was provided through October, September and October, they looked at it, they reviewed it, and they said, okay, that all the work that they have been doing over the past 15 months is taking hold. They've seen some economic slowdowns in certain sectors. We are seeing consumer spending down slightly. We also saw that bank account information is down a little bit, credit debt up, delinquencies on payments for revolving debts, whether it's credit cards, even sometimes mortgages, those are up. So those are all indications that there are some struggles for consumers. That being said, they kept rates flat. They did not say that they weren't going to raise them in December, but they were a little more bearish with some of their comments. And they've recognized that there are some true struggles out there for the U.S. consumers. That we've seen a drastic change in the matter of a week in terms of the 10-year Treasury index, as well as the mortgage-backed securities. So consumers who saw interest rates get above 8% for home purchasing now can see a little bit of the tide is out a little bit. And I actually can, we were talking about it, Tim, I'll share my screen and I'll even just kind of indicate, and for anybody who's not familiar with, red is bad, green is good. And you can see, there's a lot of red here over, going back into September, into October. We saw a little recovery in the middle of October, but then it just fell off a cliff. A lot of this was the result of some of the incidents overseas with, Israel and Palestine. And then we got some economic data in here, but we hit about the all-time, I shouldn't say all-time, but the highest interest rates we've seen on or about the week of October 23rd through the 25th. That's where we kind of saw that change of direction. And, rates can change very quickly. And so that's why I don't know if this is going to be a signaling for recovery or if this is just a blip. But if you look at where we are today, green is good. Remember, we've seen recovery all week, Monday, Tuesday, Wednesday, Thursday, and here's Friday right here. So going into today, now we are off of our highs of the day. So this is where we hit. But if you look at where we were on Friday at one point, basically, this is a signal of where rates were back. If we go all the way back to September 18th, we're back to where we were. So we've recovered a lot of lost ground in the past 40 days, 45 days. Now, does that mean things are fixed? Absolutely not. If I was to show or expand this slide, you would see that we're still about 600 basis points from where we were, at the beginning of the year. So, but from a consumer standpoint, a half a point in interest rate on a $500,000 loan could be $300-400 a month, depending upon the loan program you have. That is a significant savings in the marketplace. In our world, which is awful to say, bad news is good news for interest rates. When unemployment goes up slightly, that is good. Because remember how, Powell is always talking about, well, our unemployment is all-time low, all-time low, all-time low. Therefore, we're not in a recession. And so therefore the economy is very, very bullish and going forward. Me personally, I've never said that I've never agreed with unemployment is the only driver to indicate recessionary activity. Um, Inflation is very high. The pure definition of inflation, it correlates to how much spending is going on. If you're spending a lot, no matter where it goes, and if you're borrowing from future generations, which is what is going on right now, that is inflationary activity. So until spending is curbed a little bit, and that gets under control, you're not going to see a whole lot of inflation data improve. Again, opinion, but I'm using trend and history to dictate my opinion and response.
Got it. So what does that mean
So
to a consumer? We're here in early November. I can talk on my side. Inventory is still rather low.
yep.
But what does it mean to a consumer that is looking at a purchase in the next 30, 45, 60 days? What does that mean to them seeing
So
that this rate?
yeah, and the rates have just gone up too far. We're just gonna pause briefly. Well, I've let them know that, hey, look, we're back to where we were in September, and in September you were gangbusters. So I've just kind of let them know that affordability, that extra $200-300, which that's a lot of money to a lot of us. I mean, it's and that's on a month-over-month basis. That's $3,000 a year. So we need to understand that. But now that we've seen a little blip, if you can get under contract, if you're lucky enough to get under contract over the next couple of days, this is a very good time to take advantage of a slightly lower rate environment. And then take that along with some of the other products and options that they may have available, like we have at our company. When we package that in, the word affordable is a little more tangible, and that's where we want to take a look at. But at the end of the day, you want to look at the long-term benefits of home ownership. They're still, even if the interest rates come down, they still haven't fixed the inventory problem. The inventory problem still is very low, and the laws of economics say that demand is still going to, if the demand is high for a product or a widget, and there's very few widgets available, the price is still going to be high, regardless of the cost. So, I mean, I still believe in that theory. And as the interest rates come down, if the inventory doesn't follow that, and the inventory doesn't come up, you're still going to see home prices, push back up again. So I would rather edge on the side of let's buy now and we can refinance later if the rates continue to drop. I just don't want to have to compete again in a high interest rate and a higher interest rate and a high cost market. I want to take my chances now and plan for the future.
The golden question we all get, right? I mean, you get it too, Pat. Is this a good time to buy? And I said, how long do you plan on living here? And he said, 5 to 7 years. And I said, how long have you lived here? And he said, 20. I said, this would be your first purchase? He says, yes. I said, if you have a time horizon of 5 to 7 years and you want to be in this area, it would be a great time to pursue looking for a property. If you can afford it and you have that kind of time horizon, you're going to do well in this area with price appreciation. So I can't have a crystal ball, but we know you've owned properties, I've owned properties, we've lived in this area a long time. We see that holding a property that you love, holding it long-term has great appreciation. And we can do that in every zip code, even one neighborhood, and tell you what is looked at over a 10, 15-year trajectory. Thanks so much for this update here on November 3rd, Pat.
You got it. Thanks, Tim.